Hello, and welcome to Cut the Clutter, the webisode where we cut the noise and present the facts and our perspective around major events in the world of business and geopolitics. My name is Amandeep. I'm a senior analyst at Confluence Consultants, and I'm joined by Shraddha Bhandari, CEO at Confluence Consultants. Welcome, Shraddha. How are you?
I'm very good. How are you?
I am very well. Thank you for asking. And I think I will be even better once we've had a chance to talk about the topic for today, which is de-dollarization, something that grips everyone in our industry. I think we're all fascinated by the idea of what a de-dollarized world would look like. This topic keeps coming up, and recently it has come up again because of China's international use of the renminbi surging to a record high. So let's just dive straight into it. Let's start with the basics. What is de-dollarization, and what are some of the common economic and business activities that tend to create grounds for any de-dollarization conversations to even start? So let's start with that.
Thank you, Amandeep, for that. I think this is the question that keeps everybody awake at night. Investors, geopolitical analysts, market enthusiasts, investors, fund managers, of what would a de-dollarized world look at. Now, I'd like to add a caveat. We are basically looking at this from a geopolitical perspective of the repercussions it can cause to the global economy and therefore to global politics and connecting macro and microeconomics in that sense. We're not economic experts, so when and how the de-dollarization will happen is really not our forte either. But we'd like to just talk about what are the trends that we see today, which have geopolitical implications in the realm of de-dollarization. So I think I like to use the term dollar diversification more than de-dollarization. I'll tell you why. Dollar diversification is really an attempt by countries and economies to reduce their reliance on dollar in international trade, finance, international transactions, market transactions, etc. Unlike Russia and China, it's not necessarily born out of a desire to, stay away from US's sanctions or extraterritoriality, but to just hedge against the risks you could have when the dollar is so dominant. It could be that you're more vulnerable to the dollar shocks, etc. It would make much better sense for two countries to trade in their local currencies rather than converting into dollar and then doing the entire cycle. So a lot of dollar diversification is definitely happening. And that's what keeps giving rise to this term called de-dollarization. And we've generally seen that any geopolitical conflict of a huge magnitude, this conversation surges. Right? So whether it was the 1971 Nixon shock, then it was the 2008 great financial crisis, and then again after Russia's invasion of Ukraine. So what are the various practical ways in which de-dollarization or dollar diversification manifests itself? The first one essentially is finding alternative payment systems, right, to the US or Western-led SWIFT financial system. And we've seen a number of this sprout up in the event of Russia's invasion of Ukraine, when Russia was sanctioned and they were cut off from 300 billion central bank assets. And it's a story that's often been repeated, so I won't go into it. But the three major economies in the world are now experimenting with their own payment systems. So Russia has, they've got really long names, so I'll go with the abbreviations. Russia has SPFS, China has CIPS, and India has a UPI. This one I know it's a simpler one, Unified Payments Interface, which are essentially challenging the SWIFT system, right? So we've often heard news that transactions via the CIPS and the SPFS between Russia and China have really increased, and there are chances that they may get interconnected. So in that case, that's one aspect that's often touted as de-dollarization. The second one is payment of loans in non-dollar denominated currencies, right? So Argentina was a classic example before we had the new president, Mr. Javier Milei, who basically paid about $1 billion of its loan to IMF through Chinese renminbi. Right. The third aspect definitely is the creation of monetary zones like the euro. Right. So you also had talks about ASEAN creating a local currency framework. There are talks about a BRICS-based system, BRICS common currency. All of these will also definitely reduce the importance of dollar in the international transaction and thereby, challenge its hegemonic role in that sense. Most important, the talks of petrodollar. There have been small transactions happening between Saudi and China now for oil and basically in yuan. So that's the transaction that's been happening. So that's a very important aspect of it. There was a deal between the US and Saudi that recently expired, which was basically about the whole architecture of petrodollar. And there's a lot of news about, oh my God, the petrodollar is now expiring, and then we'll see a change in the world. But nothing has happened. It's been a number of months now. And the last one really that's really picked up is bilateral trade mechanisms. So you have between UAE and India. The ASEAN is working on it. So you basically pay for your trade in local currencies, and you have something like the bilateral currency swaps. So these are the major ways that it's panning out. A lot is happening with Russia because Russia obviously cannot now accept payments in dollar for its hydrocarbons. So a number of these ways have been explored there, and now there's a wider tendency to believe that this can be applied to different parts of the world as well. So I'm going to stop now and let you ask me questions if something needs to be clarified more.
Yeah, just your point on BRICS and ASEAN kind of coming together to create an almost Euro-style grouping. But of course, with the the difference in scales of the economies within BRICS, for example, it probably doesn't allow the creation as kind of solid as the euro. And of course, within the European Union as well, there is a difference in the scale of the economies. But we have seen that of late, it hasn't served European collective economic interest in the sense that they would have liked it to. So, do you think then that realistically, with all of these activities happening, with countries coming together to form these groups, with ongoing sanctions, do we see any time that any of this is actually successful in making it happen? Bilateral swaps, for example, between the UAE and Ethiopia. Now, the UAE doesn't harbor any kind of interest in destabilizing the dollar, or that we've heard of. And so, do we think that all of these activities are eventually going to be strong enough to destabilize the dollar in any way or even diversify the economy away from the dollar?
So I'm going to take two steps back. And there was just one thing I forgot to mention as a potential sort of contender to the dollar, and that's digital currencies. And we'll talk a little bit more about that a little later. So just two steps back, what got this conversation back to the mainstream? Of course, Russia's invasion of Ukraine, which basically showed the power of the extraterritoriality that the US dollar holds, right? So you could freeze anybody's assets in dollar. You can cut them off from the entire dollar system. Giving a lot of countries nightmares about what could happen if they go on the wrong side of the US. The second one for some time has been the rise of China. China has been insisting on sort of payments in local currencies when the trades are big. So it's trying to implemented them with some Latin American countries, with some African countries, as I said, a little bit with Saudi Arabia. France paid for one of its LNG contracts to China in yuan, but these are again very small in terms of the global forex exchange or transactions that happen in the world. Then, of course, we've spoken in the past about this in Confluence, is the shift of power from the west to the east. Right? The economic center of gravity is shifting as everyone agrees to it. Now, a McKinsey report says that by 2035, China will overtake the US, but this was done in 2011, so I'm sure there are changes to it that are coming now. There are a number of other reports that have said that the center of gravity, economic gravity, would be between India and China by 2070. The GDP ratios are shifting. US's economies, total hold over the entire economy has been shrinking. So all of that have led to this entire de-dollarization narrative again. Of course, the Fed increased interest, which meant more pain for countries servicing its debts in dollars, etc. But how effective would that be? And I'm talking in the short to mid run, because obviously US has had about 80 years of central reserve currency. It has to go sometime. But just in the short to the midterm, when does a currency become dominant, right? There are 5 aspects of how a currency becomes dominant, and a part of it has been taken from the US Treasury itself. It needs to have a sizable influence on the global economy, which US does. It's I think a 26 plus billion economy in the world. China is, I think, about 17, 18 billion, and these numbers might be a little dated. And I think the next 3, 4 countries combined to come to the United States. It has very stable macroeconomic policies. The capital convertibility of the US dollar is 100%. The debt of its markets, especially its bond markets, is tremendous. It has other vital currencies pegged to it. Every country, most countries that deal with dollar are pegged to, that deal with oil are pegged to the US dollar. And most importantly, it has a very sizable geopolitical heft.
Yeah.
You and I have been doing research on hedge funds and alternatives recently, and we find that every hedge fund activity mostly happens in the US markets.
Yeah.
Everyone wants to co-invest in real estate deals in the US market. That is the market that everyone wants to be in. And also, I was just looking at some stats that in the last, say, 10 years, the securities that are held by other foreign countries in US treasuries has also increased. So it's very difficult to find an alternative. We've spoken about China, but that's, I think, about 2% of the global forex reserves at the moment and transactions at the moment. Euro is about 20%, but Euro's got its own problem of, a sovereign bond market, for example. And then you have all of the BRICS that we've already highlighted are very divided with each other. China and India have their own geopolitical issues, unlikely that they'll come together. We've mentioned before that UAE and Saudi once tried a common GCC currency and they couldn't agree on whose geopolitical, geopolitical might it should be funneled. So all of that is definitely it takes away from de-dollarization. Dollar still remains that currency. And there are three aspects in which you look at the strength of a currency. The first one is in invoicing and international trade. Predominantly remains the United States. I think in imports it's about 48%, and its exports at even higher. Then you've got essentially access to financial markets. 80% of over-the-counter derivatives, futures, forwards, options, everything is done in the US dollar. And the last one, where I think the US has sizably lost its hold, has been the central bank reserves of dollar that are held. So that's come down to a historical low of 59%. But that could just be because a lot of other currencies have become more and more liquid now. So the banks prefer holding outside of the top four currencies. A lot of them, for example, the Indian rupee is now trades in about 22 countries, so that's become quite liquid as well. So it's not easy to de-dollarize. The geopolitical trends will continue, but given the advantage that a single country and market that the United States offers, it's very difficult for a single country to replace it. Definitely, China could only be the close second, but it has massive capital controls, rigid interest rates. Its markets are not liquid. I doubt Eurozone tried, couldn't even come close to the dollar. BRICS is still far away from that.
Yeah. So would you then say that essentially this isn't a drive to dismantle the role of the US dollar, rather to just establish either one's own currency in the market or just to reduce risk? So there isn't sort of a geopolitical vendetta against the US dollar, but it's just like you said in the beginning, hedging against risks in the international financial markets. So also just on your point about India and China, completely unrelated to de-dollarization, but I'm sure everyone's interested. But it does also tie in with my last question for you. So you'd mentioned that there was a report that India and China will be the center of economic activity or gravity by 2070. Things have changed within the Chinese economy since this report was probably published. And also, I think the US kind of giving up its position of power that easily is probably not going to happen. We've also, in one of our previous research posts, we had spoken about how for mid-powers or for the big shift from west to east to properly occur, there should be a level of unity amongst the countries that are strong enough or that are powerful enough to present that front in front of the US. So do we realistically think that India and China will be able to provide that front in 2070, where the US potentially loses some of its economic clout? And if that is possible, what is the US doing now to prevent this from happening? Did I
Super
make sense?
questions again. Absolutely. I wish I had a crystal ball, but there are two questions. Firstly, yes, some countries are definitely hedging, but for some countries, it is an existential political agenda to dethrone the US dollar. And you and I have done this in one of our podcasts earlier, James Rickett, Currency Wars, where he's very, very explicitly talked about what could potentially be a financial war against the United States. Increasingly likely because of the massive debt that the US holds and the amount of power it holds in terms of the treasuries that different countries have, etc. And if you remember, he'd highlighted some very interesting scenarios. The first one essentially was I think, again, we'll come to that, but I think one of the major reasons that Russia was drawn into the war with Ukraine or egged into the war with Ukraine was Russia has a massive amount of gold. Russia depositing its gold in Switzerland, forming a bank in London, issuing a new currency backed by that gold in Switzerland, and insisting that every country buy its hydrocarbons with that currency. In 2008, it seemed like a scenario. I think somebody in the United States took it very seriously. And now this is an unheard of scenario. It cannot roll out. The Swiss will not take the gold. The London will not let them open a bank, etc., etc. Another one, a very interesting one pertaining to this region was sovereign wealth funds. If you remember that their cutoffs, their trust corporations, etc., have they've bailed out a lot of American companies.
Yeah.
Again, a very very American viewpoint that looks at everything with suspicion. But they could potentially, cause a frizzy in the financial markets, leak information, take away, very critical national security assets, and that could challenge the US dollar. But more realistically, there are a lot of capital account surplus countries. China, of course, is the biggest one of them. It exports to a number of countries. It's the country with the largest forex reserves. Dumping treasuries in the open market is now a risk which is well woven into all of US's calculations. It'll have to be something more insidious. And given the volatility of how the world economy is at the moment, that could potentially have impacts on the US dollar dominance and therefore the US treasuries and securities, etc. So I think this is what some person told me, that if you want to challenge the US, don't go for US dollar denominated securities. Attack the reputation of the dollar itself. So those are the various ways in which could happen. But hey, US has ruled for 80 years. They do know some of these tricks, and I think the James Ricard currency wars highlights that since 2008 they've been preparing for a financial war, and thus we've been looking very closely, and this is again what I say is our interest area, why we follow the de-dollarization or dollar diversification or whatever you want to call it, is what are the geopolitical impacts of this, right? I will start with four countries, which basically led, besides Russia, of course. These were Argentina, which basically gave back its IMF payment payment to IMF in renminbi rather than US dollar. They were talking with Brazil of a new currency, which would have nothing to do with the dollar, etc. There was Pakistan, which was increasingly starting to trade with China in yuan. They paid Russia for their oil in yuan, etc., etc. Then there was Egypt, which is talking about a gold-backed currency, basket of currencies, etc. There was Bangladesh, that was doing some aspects of it. Where are all of them at the moment? I'm just putting it out there. I'm not saying that the US did this, but Egypt has an IMF loan, a massive one. Pakistan has an IMF loan, and it's been said that they are going to scrap some of the China special economic zones, along with some of these payments that they've made for Russian oil. Argentina has a new president who basically wants dollar as the main currency, and Bangladesh has a coup.
Yeah.
It's similarly, Russia is in no state now to basically implement its exalted ideas of a gold-backed currency. The Middle East is in the midst of a conflict. Every talks of mid-powers, petrodollars, challenging the hegemony of the US has been not overshadowed, been brought down. They still have a lot of clout. This region still has a lot of clout. I'm not saying that, but new weapons purchases, new technological investments. So obviously, the US is not sitting idle. It's creating these geopolitical tide and currents, which are very, very interesting to us. We've said this in our analysis before, that this all began with Afghanistan. Russia, Ukraine was the next in the puzzle. Middle East was the third point, and this will probably now converge in the Indo-Pacific. And I will not get too many details because people get really hyper. And then they're like, oh, how can you say this? How can you say that? So whoever wants to know will have to talk to us one-on-one.
Yeah. So essentially what we're now landing at is that there's always going to be conversations around diversification away from the dollar, or de-dollarization for those who like to imagine a be-all and end-all kind of scenario. But at this stage, the threats to the dollar in terms of an actual currency taking over seem to be quite limited. Would you agree?
I would say that because I've always said, a system is overturned only if there are two aspects. If it's not working well, which in this case, if you're not on the very bad side of the US, it's working okay, or there is a very sizable alternative. Digital currencies could be that sizable alternative. But again, there are very interesting conspiracy theories around Bitcoin as well. Some people essentially say one end that central bank digital currencies will end up challenging the dollar. And there are a number of, cross-border central bank digital currency payments being experimented with. I think there's a project about 120 countries are participating in that. There's the other side which says that, Bitcoin in the end or cryptocurrencies in the end would be institutional assets, which will be held by somebody. And if you see today, about 50% plus of these reserves are held by American institutions, right? So they will also require a highly capitalist, deeply liquid market for them to be traded, etc. And then the regulatory hurdles and all will all have to come from the US. So we'll have to see whether this will be the bane of the US dollar or, as some say, and ace up the US in terms of protecting their hegemony of the international medium of transactions. So again, we'll probably try and get an expert on this, maybe in our next Cut the Clutter one of these days, who can throw light on all sides of the conspiracy and just talk about how the digital currencies are, because it's like separation of state and finance, right? Separation of state and church happened, which led to revolutionary consequences. It is that. It is taking away from the state's power through an a decentralized ledger, and it then requires a lot of things to be put in place. So it'll be interesting to explore. We've got people in our ecosystem who can throw light on it, and if there's interest, we can get them on board.
Well, lots to think about. Thank you for all of the wonderful insights on this topic. I'm sure the listeners will have several follow-up questions, and if you do, feel free to get in touch with us. You can contact us on LinkedIn through Confluence Consultants, or you can get in touch with the both of us as well. And we hope to return to Cut the Clutter with a topic that is just as fascinating as de-dollarization. Thank you for tuning in, and thank you, Shraddha.
Thank you so much. Bye bye.
Bye.